Good afternoon, everybody, and welcome to Credit Chat. I'm Rod Griffin, Director of Consumer Education and Advocacy for Experian. Ms. ZD4, good to see you again. And you're coming fast, which is wonderful. I'm glad to have you here. I'm here to answer your questions about credit reporting, credit scoring, fraud and ID theft, any of those kinds of things that Experian may have some expertise in and I have some knowledge of to help you better understand how credit reports work, how credit scores work, so that you can use them as a financial tool and improve your financial health and well-being. That's what it's really all about. So Caroline Kendra, thanks for joining. Thanks for the hearts right out of the gate. If you have questions, feel free to ask, because if you have a question, others have the same question. We know that from, we've done this for a number of years. Caroline Kendra, thanks. Welcome from Louisiana. I'm next door in Texas. So I don't know if Canada sent their weather to you too or not, but I wish you would come and get it and take it back to the north. Don't like this cold weather at all. I've got it's a flannel shirt on even. I'm a warm-blooded person anymore. Michelle, 333333, thanks for joining. I am Valerie Robinson. Thanks for being here. And great first question. How long does a repo last on your credit report? So repossession for an auto loan or some other collateral will last 7 years from the original delinquency date of the debt. So it's not from the date of the repossession. What happens is with something like an auto loan, which is the most common example, if you fall behind on those car payments, after a number of months, typically the lender may charge that off as a loss essentially and say that you're not going to be able to repay the debt, so they will repossess the car and then sell it to recoup as much of that remaining debt as they can. And so when they do that, the credit report is already delinquent, already behind on payments. So from the date you first became late until and were never current again, up to and including the repossession, they would. That's the time frame that it's measured from. So the date you become late, never again current. That's the original delinquency date, the date you missed the first payment and never caught up again. 7 years from that date, the account, including the repossession status, would fall off of the credit report. If you go through a repossession process, the account will show a status of repossession or repossessed. That you may also have what we call a voluntary repossession if you return the vehicle voluntarily. That's a bit better than a sort of standard repossession where they come and take the vehicle. Not much. It's not going to have a whole lot of difference. The bottom line is that you were unable to pay the debt as agreed, but it can be a bit better in terms of taking responsibility and trying to do the right things when you're unable to pay that debt. So that's the long answer to the bottom line. 7 years from the original delinquency date is when that repossession comes off. The other thing to be aware of when I talk to people about repossession is that when they sell that vehicle, if they do not make enough money on that sale to pay the entire debt, and the lender forgives the remaining amount of that debt, you might get something in the mail called a 1099 form. A 1099 form says that you are required to pay taxes on that forgiven amount on that debt because it's treated like income under federal law. So you may have to pay taxes on any remaining amount. So even though they repossess it, you may still owe some money in the end. Deactivated 23, are there any tricks to instantly boosting your credit score? No tricks, but some things you can do. So with credit scores, they're looking at the information in your credit report. You can today, if you have late payments on your credit report, if you can catch up on those, it won't result in an instant change. It will wait. You won't see those updates until the end of the billing cycle. So it might take a few weeks for that to be updated to show it's caught up and current. That can always help. Pay down your credit cards. So the lower your balances, the better. That's going to result in as close to instant as you can get in many ways. Really important to keep those balances low. Today with credit scores, the newest scoring systems, if you pay a collection and it's reported as paid in your credit report, the new scores ignore those paid collections. So even though they're still part of the report, once they show a status of paid, they may be excluded from the score. That can help right away. The other thing you can do today that you couldn't until about 6 months ago is add your positive cell phone payments, your positive utility payments to your credit report through a service we call Experian Boost. So if you go to Experian.com/boost, you can give us permission to check your bank account, your savings account, checking account that you pay that utility payment through, or that cell phone payment through, or that cable TV bill through. capture that payment each month and pull it into your report as an account. So it shows that positive information. We're actually seeing scores improve on average for 2 out of 3 people, about 13 points, somewhere in that neighborhood. For people with thin credit files, if they have a short credit history with just a few accounts, we're actually seeing scores increase about 19 points on average. So seeing some significant increase, and that is instant. We go in, you'll get a FICO 8 score when you start the process, and you'll see where you are, go through that enrollment process, and at the end we give you another FICO 8 score, and you'll be able to see if there's a boost right away. So as I said, about 2 out of 3 people are seeing improvement. So that is instant right away. We'll capture up to 24 months. It's free. It's permission based. So don't have to worry about if you want to do it, it's your choice. If you choose to stop, tell us, and we'll stop and we'll remove that information from your report. So you're in complete control as well. Really, really new service. Not sure why it didn't work. If it's not paid through a savings account or checking account, we're adding new banks all the time. So you have to be able to go into your bank account. You have to pay it through your bank account. I had that happen with my bank when I first enrolled. They weren't in our user list yet, and so I couldn't add those payments until they were added. So that was an issue. So we're learning as we go as well. So it's brand new. I'm not sure why, but it has to be paid through a savings account or checking account if you pay it with a credit card. I've seen that. I bring that up because I've seen that be a stumbling block from time to time. So not sure why it didn't work. What's the impact of 2 late payments and has been reporting your credit? So Caroline Kendra, the answer to every credit reporting question and credit scoring question is it depends. So anybody who's been here before has heard me say that. And it does. The amount will, in terms of points, will differ from lender to lender, from credit scoring system to credit scoring system. So if they're using a Vantage score as opposed to a FICO score, you could see a different point change. And from person to person. There are 220 million people approximately with credit reports. Every one of them is a little bit different. And so it's impossible for me to say if you miss 2 payments, it will be X number of points because it really depends. Do you have a really long credit history? Is it short? Do you have a broad mix of accounts or just a few? Do you have you had late payments in the past or issues with paying debts, or have you always been paid on time and you just missed 2? All of those things weigh in. So it's hard to say. The thing to be aware of is that anytime you miss a payment, that's the most important factor in every credit score. So it will have a significant change. And so you will see a significant decrease in your scores when you miss a payment. If you've never missed any payments and it's the first time, lenders know life happens. Talk to your banks, talk to your credit card providers, talk to the lenders that you work with, and they may be willing to remove those late payments and take it off of the report, which would help. If you've had issues in the past, they'll be less likely to do so. So it can be a bit of a challenge. Hirschberger 1, thanks for joining, and Forrest Gump, thanks for being here. What can you do to remove late payments? And so if they're accurate and your account really was late, you probably can't remove them unless, as I said, the lender agrees to do so. And if it's life happens, like I said, and if it's the only late payment you've ever had, they might be willing to. But in most cases, those late payments are going to stay on your report for 7 years from the date of that missed payment. If you miss a payment and you miss several in a row, they will come off 7 years from the first late payment up to the point that you were current again. So we call it the original delinquency date. If you miss a payment, this is where it gets a little confusing. If you miss a payment 1 month, you catch up the next month, so you bring the account current, and then you become late again. You would have that first missed payment fall off 7 years from the date of that payment. Then there would be a month that would pass because your account was current, and then the next one would come off. So you can have more than one delinquency date in the credit report. So be aware of that as well. But if they're concurrent delinquencies, is that the right term? If they're repeated and one after the other, you're going to have that they'll be removed at the same time. But it's 7 years from that original delinquency date. And that's really because it shows the history of that account. J. Durrell 33, make sure I'm saying that, JL Durrell 33. My credit report reflects medical expenses, yet they're being held by collections. Wait a minute, I just got too far. Reflects medical expenses, yet they are being held by collections. Could this prevent purchasing a home? Possibly. Some mortgage lenders require that any collection account be paid or removed from the report. So if you have a collection, it's a legitimate collection, you need to pay it. With medical collections, they're treated differently today than other kinds of collections. If you have a medical collection on your credit report and you pay that medical collection, the newest scoring systems will exclude those paid collections from the credit report. So you wouldn't have to worry about them at all with the new scores. If mortgage lenders are looking at it, they may have requirements that it be shown as paid, so that you'll need to work with that lender and make sure it gets paid. We are also now essentially holding medical collections for 6 months before we put them on the credit report, to make sure that they are a legitimate collection, that they're not a billing error or not an insurance dispute or an insurance payment delay, those sorts of things. We want to make sure that they're a collection account that should be on your report. So there's some protection there as well. But they could. Like I said, I'm not sure why it didn't work with that particular company. We hope, and I think there's a way to put comments in. Let us know, because we're always looking at those. Gorilla Glue, thanks for joining. Ms. ZD4, what if you die and owe a car loan? Can they go after relatives for payment? Funny you should ask that. I just did a Facebook Live a couple of days ago with Leslie Tane, so you can find it on our Facebook page. And I don't have the link in front of me, but we can get that for you too. But that's what we talked about, was death and debt. We were going to do it at Halloween, right before, on the 30th of October, and technology tricked us. It didn't treat us. We couldn't get the sound and things to work, so I had to delay. But if you owe a car loan and you pass away, generally, if there is no cosigner for that account, meaning you are the only debt holder, then no one else would be responsible for it. It would have to be paid through your estate. So if you have other property, a house, other kinds of property that could be sold, investments, those sorts of things that are applicable under the law to pay those debts, that would have to happen from the estate. Otherwise, it wouldn't go back to your family or relatives. If, however, that someone is a cosigner or legally responsible for that debt in addition to you, then that debt would have to be paid by them, and they would have to continue making those car payments on time. So if you cosign for a car and that person passes away, you then become responsible for that debt. So be aware of that. It's a really important question. Something we don't always like to think about is our mortality. We all will pass away. We have family members that will happen. So it's a hard thing to talk about, but a really important one. So checking out. So I'm not sure. I am Valerie Robinson. I'm not sure what happened. Again, so there are always different issues. So check with and provide the feedback, and we appreciate it. I will share that as well with our product folks to make sure that we look into it. Jetty 777777777. Thanks for joining and being here. If you have any questions, if you're just joining, I'm Rod Griffin. I'm Director of Consumer Education and Advocacy for Experian. This is Credit Chat. I try to be here 1:30 Central, 2:30 Eastern on Tuesdays and Thursdays. Didn't make it Tuesday, but I'm glad to be here today. And we also have a great chat on Twitter on Wednesdays at 2 o'clock Central, 3 o'clock Eastern, and talked about holiday savings, all sorts of those kinds of things. How do you prepare for the holiday season, having a great new year? Had a great chat about that yesterday. But you can learn more about both this Periscope and about our credit chat at ex.pn/creditchat. And we hope to see you there. I try to be here for 30 minutes and answer your questions. That's what this is really all about. Caroline Kendra, one is a program that pays it for you up to 6 months. I'm missing part of that question. I do believe. What can you relate payments? Never missed until then. So yeah, so that would be, and the lender may have programs that work for you as well, which is a great thing. We always tell everybody, you should work with your lender early and often if you know that there are going to be issues, or if there have been. How long have I worked at Experian? For 22 and a half years or more. So more than 22 years. So I've been around a little while. And so picked up a few things along the way. Forrest Gump, thanks for being here. Root Free Ballermini, thanks for joining. I'll get there. JB Jaybird, thanks for joining. Hola, good to see you from Spain. Hope you're having a great day. I'm in North America in the U.S., so I can only speak to U.S. credit reporting, credit scoring, and our policy and procedures. Credit reporting actually is different from nation to nation. Experian is a global company. We're actually our global headquarters, are in London, England, but our credit reporting systems are unique to each nation. And credit reports do not change or cross national boundaries because they're so unique in each country. You don't have to worry about that, but I can't speak to the laws and regulations in other places. Just visit us here on Wednesday. Again, you can learn more at ex.pn/creditchat and find out more about how to join us on our chats. N3WKB, not sure if this is a question you may answer, but normally, is there a rule of thumb when a lender closes your credit card account due to inactivity? And that's that other it depends answer again. Depends on the lender. The things that I always kind of bring up when you're thinking about that, about whether or not you should close an account, or if a lender contacts you and says, hey, you're not using our account, we're going to close it due to inactivity, which is kind of the common thing. It's happened to me. I've had accounts where they've called and said, hey, exactly that. You haven't used this account for a year. We have to maintain it as a lender in our records. We have to comply with the law. We have to make sure that we're sending notices and updates. So it's expensive for them. And if you're a customer who's not using an account, they may say, do you really want this account now? If not, we'll close it. And what I look at are several things. One, do I plan to use the account in the future? If for some reason, with the holidays coming up, if there's something I think I might want to shop for and maybe get a discount, I've had that happen, and I've said, I think I will. I'll go make a purchase with the card so that it stays active and remains open. I've had accounts where I've looked at it, went, I haven't used it, don't really want it. I'll let them close it. If I'm going to let them close an account, I always consider first, are there any things I need to do with my credit in the next, say, 3 to 6 months? Am I going to make a major purchase? Do I need to buy a car? Do I need to buy a house? Thankfully, I haven't had to do that for a very long time. Don't want to. If I were going to make a purchase, you make sure that you leave them open until you've completed that process, because if the account is closed, you will lose the available credit limit for that account. And as a result, your scores will dip a bit temporarily. So it's best to leave them open until you complete any kinds of applications that you are planning for in the next 3 to 6 months or so. It's just safer that way. Usually, if you have really good scores or strong scores, a closing account will not cause it to drop so much that it will have any real difference for most people in terms of being able to qualify or get the terms or rates that they're looking for. But just in case, it's good to leave it open. So it's a choice you need to make, but look at your overall financial situation. Do you need that account? Are you going to be using credit in the future that it might affect your scores when you need them? If not, maybe close it and don't worry about it if they call you. But it depends on the lender. Some it's just a matter of how long has it been since you've used it, and if it's not active, they may not. The other thing to be aware of is if you have an account and it's in your credit report, you need to have activity in that account, or it may not affect the scores either. Credit scores not only look at is an account open, but also are you using it. So they need often 6 months of activity in order to be included in a score. So even though the account's on your report, if there's not been any payment activity or update activity, it may not be reflected in the score anyway. So it may not be affecting your score at all if you haven't used it for a long time. So if they close it, may not make any difference because there's been no activity. But if there's activity in that account, it's going to help those scores. So you need to use an account periodically, make a small purchase, pay it in full, so you're not carrying debt in order for it to affect the scores. Your score was 684 and randomly went down to 676. No late payments. The only thing I did was charge $4. And there you go. It's about an 8-point change, $400. That makes even better sense. So it's about an 8-point change. I can tell you my scores go up and down all the time. Everybody's does. Just depends on what's happening in that history. And when you're looking at the score change, 6 points generally is going to make a huge difference in terms of where you would fall in terms of the risk range, and I think that's probably the case here. But my scores vary as I use credit. So if I increase my credit card balances, my scores may drop a few points. If I pay things off, they may come back up. If I open a new account, they're going to drop, and then as I start to pay that account, well, you'll see it go back up again. So as things get older, if you have late payments or things like that, the older they are, the less effect they have. Your scores might climb up again. The newer a late payment is, the bigger impact it's going to have negatively. So scores don't just kind of hit a point and stay there. They change as your history changes at a particular moment in time when you apply for credit. So don't panic about that. 6 points will probably come back as you pay that down. You'll see that number come back up again. Better to pay it now if you can. I mean, ideally. If you don't, if you carry it over, if it's a credit card and which charge $400, you're going to pay interest on that. So it's going to cost you money. So if you can pay it in full, you don't have to pay that interest, and you don't have to carry a balance to have good credit scores to help your credit report. Carrying a balance doesn't do anything except cause you to pay interest on that account. So it costs you more money from a credit scoring standpoint. How often do you use a credit card then to keep activity going so avoid closure? Make a charge every month, maybe every couple of months at least, and you'll see that activity. And a charge doesn't have to be much. I mean, $10, $15, $20, and turn around and pay it. Maybe you go to the grocery store, pay for your groceries with it once a month, or every so often, and then turn around and pay off that bill. Just so there's activity showing you use that account, and that lets you also take advantage of points or discounts or things like that. So, always use credit as a financial tool. And I always say debt's the financial problem. If you have a credit card and it offers cash back for purchases, by all means, take advantage of that. That's an incentive for you to earn and give you an advantage if you turn around and pay that balance in full. So that saves you money, or you get points toward airline miles and cash back potentially. All of those things can help benefit you financially as long as you're not carrying debt. So if you turn around and pay that balance off, credit's going to benefit you. It's the debt that gets to be the financial problem when you have to pay interest on those charges, potentially fees on the charges, those sorts of things. That's when it gets to be a problem. So credit's a financial tool. Debt's the financial problem, and it's hard to think about them differently, but they are. Debt and credit aren't the same thing. They're very, very closely related. So use credit as a financial tool. I don't like to charge a lot. I've gotten a good habit to pay off the balance before interest charge. Perfect. I mean, that's ideal, and that's going to help build that credit history so it's there to work for you if you need it. Another thing that I often talk about with people is it's important to have a credit report and a credit history that's there to work for you so that you have access to financial tools if you need them. Doesn't mean you have to take them or use them to get pre-approved offers in the mail, for example. That actually gives you an advantage as a consumer because it opens the marketplace nationally. The most powerful word in credit is no. It's the shortest word in our language, well, except for I, but saying no, and it's sometimes the hardest thing to do. But just because you get an offer doesn't mean you have to accept it. But if you get one that's ideal, fits your needs, maybe so. So that gives you power and gives you opportunity beyond whoever might be local that you work with. Not that there's anything wrong with your local bank, credit union. I bank locally as well, but it's still a tool that you can use to your advantage. So recognize those tools. I have to use in small amounts. Yeah, I mean, just every so often, make a purchase if you're in the store. And I do that occasionally. It's like, oh yeah, I'll just pay for this with a credit card today because I haven't used it for a while. And then I turn around and go online and pay it when I get home. So it doesn't even have to last long, or maybe the next day, as soon as it appears in the account. Sometimes you have to wait a day or two. Not afraid to say no, and you shouldn't be. But a lot of people forget to say no because they get offers, and coming into the holidays, that's a really important thing to think about. You can, in many cases, walk up to the counter at a store, or if you're shopping online, they'll say, "Hey, if you apply for our credit card, we'll give you a discount of 10 or 20 or 30% on your purchase." It's very tempting to apply every time you see that. You really shouldn't. You don't want to take on a whole lot of new cards and apply for a lot of new accounts all at once or in a short period of time. So pick the one or two, plan ahead, know which places you're going to shop and where it might make sense to apply, and apply there and take advantage of those discounts that will save you the most. But don't apply everywhere you go. Let's say no, because they'll often offer you that. I did opt in a credit card accidentally. Yeah. And it's not a huge thing. If you did opt in, you get one. No worries. Look at your credit report, use it well, or call and have them, cancel the card. But if you have a card that suits your needs, use it. If you opted in, said I want that card and applied, that's fine. Doesn't mean you have to use it to make charges either. Green Glass 11, thanks for joining. Ms. ED4, thank you, and thanks you for being here always and the great questions you ask. Could that have lowered your score? I did opt out. Yeah, I mean, it may be a little bit. It probably went back up. And that's the other thing. If you have a new card, initially you may see your scores drop. It also, though, can give you a higher credit limit in total. And your balance to limit ratio across all of your accounts is the second most important factor in score. So if your balance to limit ratio is low, or if you get a new card and that gives you a higher credit limit, that might work to your advantage over time. So not a new card. Oh, it's the opt out. Yeah. So, and you can opt out of pre-screened or pre-approved offers as well if you want to do that. And there's a website to do that. Opt out, pre-screen opt out, or optoutprescreen.com. And I always get them backwards because I haven't looked at it for a long time. And it's the Direct Marketing Association. So you can search for that. How do you opt out of pre-approved offers if you want to? Again, I use them to my advantage. If I get offers, I can always say no, shred them, and I'm off. It doesn't change anything. But if for some reason I need an option or a card or a financial opportunity that I see that's going to work for me, I might accept it. So I use it just to give me opportunities out there that I might not have otherwise. Chapin Galamau, probably said that wrong. I'm sorry, but I tried. Thanks for being here. If you have any questions, please feel free to ask. I'm Rod Griffin. I'm Director of Consumer Education and Advocacy for Experian. This is Credit Chat. I try to be here Tuesdays and Thursdays, 1:30 Central, 2:30 Eastern. And we're on Twitter at 2 o'clock Central, 3 Eastern every Wednesday. You can learn more at ex.pn/creditchat. And the whole goal is to answer your questions and help you get the information you need to make decisions that work for you using your credit report and your credit score. A credit report, credit scores should not be a mystery. They should be something that you use as a financial tool. You should be able to know when you walk into the lender exactly what they're going to look at, know where you're going to stand in terms of risk. You may not see exactly the same score, but you would know if you have a good score from Experian, you're going to walk in, they might get a slightly different number, but it's still going to show you a good risk. You'll know exactly what to expect. And that's the way it should be. We want to help people have the knowledge and skills that they need with regard to their credit reports and scores to be able to get the credit and financial services they need when they need them. And we want to help lenders connect with you when you need those financial tools. Our goal is to be a partner in that process, not feel like we're a barrier. That credit report shouldn't be. It's a tool that can work to your advantage if you use it well. And that's what we want to help people do. So that's why I do this. And that's why I have a job. I work for a great company that gives us the opportunity to share with people and help provide information they need. So thank you all for being here. Still have a couple of minutes. If you have more questions, I'll be happy to do my best to answer. Drew did it. Thanks for joining. I don't know what you did, but I hope it's a good thing. I8761, thanks for joining and for inviting others. It's great to have more people join us all the time and to share information. The other thing that's great about Periscope and this platform is we get to share with each other our experiences, our knowledge, and things we've learned. So we learn from each other, and I learn from all of you too. And I can tell you that with the questions that come up about our products or services, concerns you have, I do share with our leadership to make sure that we're able to be aware of them and address them as well. So it's a great way for us to learn and to make changes to make sure that we're doing the right things. Scroll down to the bottom. NRV Deb, thanks for joining, being part of the chat, and thank you for all the great questions. Again, if you're just joining, I have about one or two more minutes on this wonderful Thursday. We have sunshine in Texas, which is great, better than the rain, but it's still cold here. Not as bad as it is in other parts of the country, but it's still cold here. So we're getting used to the weather again. Winter has arrived. But please feel free to ask any questions you have. I'll do my best to answer. Whoops. I touched the screen one too many times. But thank you for what is the great. One more question. Carolyn Kendra, what's the best way to get your credit report in the mail? So if you go to annualcreditreport.com, there's a mailing address that you can send to request your report. You can also request your report by mail from Experian. If you go to Experian.com, it could send you to a website, but you can get a mailing address. Actually, though, if you think about it, getting your report online is clearly faster. It's also safer because if you mail a request for a report, you're going to have to send us a letter in an envelope that says Experian on it. And in that letter, you're going to have to tell us all of your identifying information, your name, your address, social security number, date of birth, previous addresses, so we can match to the correct report. And the challenge with that is fraud only happens when people get involved. So if you're sending a letter in the mail, it passes through any number of hands, going to Experian, and it's going to take days, perhaps more than a week to get to us. And it will go to Allen, Texas, which is where the letter will go. And I'm blanking on the email address. I'm sorry, or on the street address. I'm sorry for that P.O. box. But you can find it online at Experian.com as well. But that increases risk of fraud and exposes your information potentially. That's the reality. We try not to have to mail it. Sometimes we do need things to be mailed back and forth because there's no better way yet to do it. But if you go online to request your report, we'll give you, it's encrypted, it's instant, it's very secure, and you get a current copy of your report right away, and then you can dispute and do whatever you need to do. So if there's things you're concerned about that you might need to dispute, you can go to Experian.com/dispute, and we'll give you a free report right there online if you don't already have one, and just provide some of your identifying information. Again, it's encrypted and secured, so we give you that report at no cost, in addition to the free annual report. But go to annualcreditreport.com. You can find a mailing address as well. Still a legitimate way to get a report, but it does take longer. And with modern technologies, I think there are safer, better ways to do it. You can print your report right away if you get it online as well. So it's there for you, but you can mail. Paid off an auto loan or pay off a credit card. Which would I do first? That's a great question. I would pay off the credit card first. And the reason is this. The balance to limit ratio, what we call utilization rate, is second only to your payment history in terms of the effect on credit scores. If you pay off that balance, you will not have to pay interest on that card. You're going to help your scores better than paying off that auto loan right away. The auto loan is what we call an installment loan. You're told you're going to pay X amount, a certain amount on this date every month until it's paid off. So there's no free will in that decision. You just pay it as you go along, and it's fine to do that. But paying off the credit card will probably help first. And if you pay off the card, potentially you could use that money that was going to paying off that card, put more toward your auto loan and pay it off too a little faster. So I would pay off the card first. Would be my preference. Is there a specific mortgage loan that is suited for people with very poor credit? It's difficult. There are great programs. I'm not a lender, and Experian doesn't make those decisions. So better to talk to your lender. Go to a credit union, go to a bank, go to a mortgage lender, get what we call pre-qualified, which means they won't necessarily check your full credit history. It's not like a full application, but they could give you a sense of how much money you would qualify for to buy a house if you were to apply. You can also get pre-qualified, which means they go through the full process and they can tell you this is what you will qualify for, this is how much we'll write a check for you if you buy a house. So talk to a lender. They're really better suited to give you that answer than I am. And it depends again on the individual. So there are VA loans for Veterans Administration loans. There are first-time home buyer opportunities. There are low down payment kinds of programs. So lots of different loan programs for people buying houses. So there might be one for you, but a lender is really better to give you that information. So thank you all so much for the great questions and for being here. I'll try to be here again next week, Tuesday, 1:30 Central, 2:30 Eastern on Credit Chat. On Periscope, we'll be here next Wednesday on Twitter. To have another great conversation about personal finance issues. And I'm trying to look at my screen. I can tell you exactly what it will be. We will be talking about the importance of giving back during the holidays, which is going to be a great topic. How do we, saving our own spending, but also giving back is part of being financially responsible. So will be a great conversation. Hope to see you there. You can learn more at ex.pn/creditchat. Hope to see you all soon. Take care, everybody. Have a great rest of your day. Stay warm in this weather, and I will see you soon.